Today we released the RMB BER Business Confidence Index for the first quarter of the year.
Mm-hmm.
It looks pretty good, but we do have a caveat that comes with this release. Could you maybe give us some details on that, please, Ettienne?
A big caveat, unfortunately, Siobhan. Quite important to keep in mind that the field work for the first quarter study or survey was done between, I think, the 9th of February and the 28th of February. Most of the results from the questionnaires were available before the Ukrainian invasion. So that is quite an important point to keep in mind. The next survey will be done in June. Now, what the world will look like then, I've got no idea. How it will affect confidence, very uncertain. That's a story for another day. None of that, however, must take away from what has actually been, as you already pointed out, a relatively encouraging result in the first quarter of this year. So the headline index went up 3 points to a level of 46. Notable about the 46 is that it is perfectly in line with the long-term average. What we've also seen when you think about the BCI index is that, yes, it has been volatile over the last couple of quarters, but it is certainly going in the right direction. There's clearly an upward trend in the BCI. 46 is also quite different from the 5 index points, at the height of the crisis in 2020. So we're moving in the right direction from a BCI perspective.
Definitely a big step in the right direction. I agree. And do we see that this is broad-based across all the sectors that are surveyed, or are we seeing some variation?
There's variation, definitely. We survey 5 sectors, as you know. The good news is that the BCI went up in 3 of those 5 sectors. We had a very strong increase in the new vehicle dealership section of the survey, up 13 points. It's above 50 now, at about 54, so in net positive terrain. The story there, I think, is interesting. Remember, in the second half of last year, we had certainly a case of stock shortages of certain make and models of vehicles that definitely depressed sales and confidence. What we saw in the first quarter of this year, apparently, supply is improving a little bit, more deals were done, confidence has certainly reflected that more vibrant economic activity. The other sector, also with an index level above 50, is the wholesale sector. That index went up about 5 points. 57 is the level. There's another interesting story developing here. If you are a wholesaler of non-consumer goods, you're seemingly doing just fine. So what's the story? Wholesalers of non-consumer goods seemingly starting to benefit very nicely from the boom in mining. What we saw certainly was a pickup in this sales of machinery, equipment, tools, boom-like conditions in agriculture, chemicals, and so forth. So wholesalers certainly starting to reflect those positive developments there in the non-consumer segment. The third sector, which is quite an important one for South Africa, that also showed an improvement in confidence, is the manufacturing sector. The index is not in net positive terrain, but certainly moving in the right direction. The level is 43, which is also above the long-term average. Striking in this sector is the fact that production picked up quite nicely, and that is despite shortages of various inputs, steel as an example. Supply chain bottlenecks is still a big deal in manufacturing. That is a legacy COVID. Probably things will get worse in the context of the war that we're currently experiencing. But production volumes is picking up, and production will only pick up if there's demand. And demand seemingly picking up on the domestic side, as well as foreigners wanting to buy some of our manufacturing products. I think, in summary, in the manufacturing sector, things would have been even better if it wasn't for the supply chain disruptions and certain shortages of inputs. I spoke about the good news part of the survey with reference to those 3 sectors that have shown an increase in their BCI levels. The remaining 2 sectors, confidence came down a little bit. Take us through those.
Sure. So we see with the building contractors that there was a decline, and this is the sector which really does seem to be lagging all the other sectors in the economy. But it doesn't give us the full picture. What we're also seeing is that in some parts of the building sector, there are some positive moves. But the problem is building contractors, which are a major part of the sector, are seeing issues where we have, oversupply in terms of retail space, office space still, so there's no demand for new buildings. Tendering processes are being slowed. Building approvals are being severely delayed. And so where most of the activity in the building sector has been much smaller projects, refurbishment, renovation, etc., which tends to benefit your subcontractors more than it does your contractors.
And smaller projects, you make less money.
Absolutely.
Okay.
And then on top of that, we then have retail, which again isn't one of these mixed pictures. So, it has fallen again, but, and it has fallen below the 50 level. So it is now net negative, but only slightly so. And basically what we're seeing is a change in consumer behavior here. So it's not just that expenditure is leaving the system, but that it's changing out. So we're seeing improvement in demand for services, where people were buying all their food for consumption at home. They're now buying less food at, from the stores and going to restaurants if they can afford it. We're also seeing, some improved demand, for going back to the office, for example. So, office clothes and such like. So your semi-durable goods. So it is a story more about change behavior than necessarily, a complete, decline, in behavior that we are seeing.
So an interesting shift there is then, confidence amongst retailers of non-durable goods, your food retailers and so forth, coming down. But confidence amongst retailers of semi-durable goods, clothes and shoes and footwear actually picking up in the context of the dynamics that you've described. Interesting shifts. You talk about changing in consumer behavior. I think the retail sector, you're clearly seeing it there. Okay, so now we're looking forward. We have the fourth quarter GDP data in hand. It showed a nice recovery from what has been a bad third quarter last year. This results today, what does it tell us about the first quarter in terms of economic activity in the beginning of the year?
This definitely suggests to us that we are likely to see improved, the improvement in activity continue into the first quarter of the year. So it is a positive print in that respect. Again, as you mentioned at the very beginning, and I think this is important to bear in mind, is what this means going forward is quite uncertain. What the impact of very high oil prices on, say, retail sales going forward are, what the impact of the war on global demand is going to be, and how that then affects business in general, does mean that we face a very uncertain time ahead, and pretty much only time will tell us what is going to happen to our economic recovery.
Thanks, Siobhan.